Hello everybody, welcome to Talk About House. I'm Todd.
I'm Juana.
Today's video is about this chart. We're going to pretty much talk about this chart. We have some other information. Only 28 out of every 1,000 U.S. homes changed hands this year. The lowest turnover in decades. We're going to go through some very interesting data, get to the bottom of this. It's actually a bunch of things that's happened at the same time, kind of a perfect storm.
Okay.
Right?
Let's go.
Okay, so Juana, turnover is almost perfectly correlated with total number of home sales, right?
Right, because turnover means homes that change hands, right?
Right.
So if we have a lot of homes changing hands, that means that we have a lot of home sales. If we have few homes changing hands, then we have few transactions.
Okay, now you can have a lot of homes change hands, home prices go up. You can have a lot of homes change hands, home prices go down, like we saw 2007, 8, 9, 10, kind of that time frame. You can see very few homes change hand, home prices go up. You can see very few homes change hands, home prices go down.
Right.
Where are we in that? We're obviously in the very few home prices changing hands, but it's not like 4 houses go on the market, 1 sells and the other 3 just like never sell, right?
No, so I mean, we do have few transactions, and we have diminished transactions for a whole host of reasons, which we can go through now or later. That's up to you. But you know, part of what's happening as far as prices are concerned, prices have basically been, flat for most of the U.S. I mean, maybe where you are, they're up a little bit, or maybe where you are, they're down a little bit. Even if you're in Vegas, maybe overall Vegas is down maybe 1%. But when you're looking at it on a neighborhood by neighborhood basis, you might be in a neighborhood where home values have gone up. You might be in a neighborhood where home prices have gone down a little bit. Generally speaking, Vegas has been pretty flat.
Something else I want to point out about this chart before we jump into data. This chart was intentionally designed to look really bad, because what they did is that 27.7, the bottom of this chart's not 0, it's 24. So anytime you want to make a chart look bad, you scale it in such a way that it looks like it went from one extreme to the other. And that 44 out of 1,000 versus 27 out of 1,000. If you zoomed out to 1,000 homes, it would look like a very small line at the bottom. But what they did is they zoomed in on between 24 and 44, which is zooming way into 1 out of 1,000, and you're just seeing like a little bit of noise. We're going to talk about this a little bit. Okay, Juana, let's first talk about this factoid. You are a homeowner, and let's say we'll start with the first one. Your mortgage is paid off. You don't have a loan at all. What would your reluctance be to selling and then go buying another house?
So that's a great question. So homeowners who have homes that are paid off, chances are they've been in that home for some time. Okay. So maybe that home has appreciated. And remember, we've done videos on this before as far as this could turn into a taxable event, right? And that amount of appreciation could turn into capital gains tax. This has not been adjusted in decades. So maybe
30 years.
Right. So maybe that's a consideration. So let me give you an example. Maybe you bought your home back in the day for $250,000. Maybe your home is now worth $800,000. Okay. And maybe you're single. So that's a lot of appreciation that you're going to be paying taxes on, because as a single person, you're going to pay taxes on anything over $250,000 in appreciation. If you're married, you're going to pay tax on anything over $500,000 in appreciation. Either way, this is a taxable event in this scenario. So maybe that gives you pause. Another thing that might give you pause as far as not selling your home is maybe you would like to maybe be closer to grandkids, or maybe downsize, or just relocate to someplace more interesting. However, you're thinking, well, again, if I sell, then I'm going to have a taxable event, and then maybe the area that I want to buy, maybe it's more expensive. So now I'm going to have a mortgage payment, and that mortgage payment's maybe going to be at a higher interest rate than what I'm accustomed to paying. So maybe I don't quite have the stomach for that. So there are all kinds of reasons why these people are staying put.
Here are the statistics. Record paid off mortgages, about 40 to 45% of U.S. homes, roughly 35 to 40 million properties. When it says properties, it means single family residences, doesn't include condos, are now mortgage free, the highest rate since the 1940s. Many of these owners, often older Americans, paid off loans during low rate eras or inherited property. Selling means entering the buyer pool at current high rates and prices, so they stay put, reducing supply by millions of potential listings. This also ties a reliance on home equity loans for retirement, further discouraging moves. You got people locked. This is one of the legs of why we have so few homes changing hands. We know a lot of people in this situation.
So I actually heard from some people not that long ago that were asking me, well, I've heard rumors that they're thinking of doing away with capital gains tax on primary residence. Maybe if they do that, then we would be interested in selling. So there are all these things going on for these people that have homes that are paid off and they have a lot of equity and a lot of appreciation. So they're considering all these things because remember, they're probably no longer earning as much. So their tax is very important to them. So that's one of the considerations that people have.
Let's talk about people that own rental houses because this is part of the housing stock.
Sure.
You bought a house 15 years ago for $100,000. It's worth $400,000 in Vegas. You fully depreciated it over time. And you're collecting, we'll just say you're collecting $2,000 a month from it in income. If you sold the house, would you have tax liability? Because
certainly.
It's not a primary residence.
Certainly. So what we were talking about as far as doing away with capital gains tax, that would be on primary residences only. But on investment properties like a rental, there's no talk of doing away with that. So you would have to recapture all that depreciation, and so you'd have a pretty substantial taxable event. You could avoid that taxable event if you did a 1031 exchange and purchased another income-producing property, and that's a possibility. However, then this all would be a wash, correct? Because if you sold one property and you purchased another one, then really that doesn't mean anything because it's not really bringing new inventory onto the market because you're buying one, selling one, so you're still at a net zero as far as inventory.
Let's talk about low interest rates. You bought a house whenever. You could have bought it 4 years ago. You could have bought it 10 years ago, but you refied or originated a loan in 2021 when interest rates were 2.5%. What is why is that locking people into place?
Right. So, to your point, if you have an interest rate that's, give or take 3%, that's pretty hard to give up. Because remember, the way mortgages work in the U.S., that mortgage stays with the property. It doesn't stay with the borrower. So when you sell that property, that mortgage will be extinguished. And when you purchase a new property, you're going to be creating a new mortgage at the prevailing rate, which clearly prevailing rates are twice what they were at that point.
And home prices are more too.
Yes.
Here's the actual stats. Low interest rate lock-in. Around 54 to 55% of outstanding mortgages are below 4%. Down slightly from 2021 peaks. Homeowners who locked a sub 3% rate during the pandemic face a payment shock. A typical borrower would pay $675 more per month on the same California home at today's rates, or $915 in high-cost areas like San Francisco. A bank rate survey found 54% of owners wouldn't sell at any rate in 2025. And what's interesting is interest rates now are the lowest they've been in 3 years. The general overall interest rate, they're just about 6.1%. Now, if you have really good credit, you get low fives. If you're putting high down payment, you're getting like a VA loan and doing 15 years, you get under 5%. That's a lot of people locked in. Here's another interesting stat I found. If you currently have a mortgage, your average, meaning home's not paid off, you're making payments. The average mortgage pays right now is $1,500 for an average house. The average renter is paying $2,200. So if you were to give up your house that you're making a payment on, and then you were to go to rent a house, you're actually going to have $700 more a month coming out. So a lot of hesitation is, well, I have to move to a different market maybe. Maybe you just say, forget it, it's not worth it because, I give up this house, now I got to pay rent somewhere else maybe, and it's going to be a lot more money, right?
Yep.
Okay. Now, I'll put this in perspective. In a market like Vegas, we have over 50% of all homes are free and clear. And we also have more than 50% of all homes are owned by investors.
Okay, so that means that half the market's actually very solid.
It's very locked in.
Yeah.
We have very low number of sales here, and it's predominantly the same, it's like owner occupant homes that keep sort of flipping over. And of course that is, it kind of it affects the high end as well. Now, in a normal market, like healthy, pretty busy, 5 million homes selling in a year is pretty normal. 6 is a hot market, 4 is a slow market, right?
Right.
Okay. Found exact numbers. This lock-in, which is from the interest rate differential, has slashed inventory by an estimated 1 to 2 million homes annually. Even as rates dipped to 6.17% in late October, a 3-year low, we just talked about that. The effect persists because the gap remains wide. Rates would need to fall below 5% for meaningful relief. Experts predict a gradual unwind by 2027 as rates ease to about 6%, but affordability challenge will linger. Now, if you watch the Crash Bros, they will pick the 5 markets where home prices are going down, and that's all they'll talk about. But if you look at 400 markets in the U.S., you probably have 100 and something where you have 1 or 2% price declines, and you have the same 100 or so with a couple of percent price increases, and then you have most of the other markets that are about the same, and then you have some on the high end that are up a lot, and some that are down a lot, like on the ends. But if you look at the whole housing market in the U.S., it's almost malaise. We said 3 years ago, people laughed at us because we said home prices would moderate for the next 3 or 4 years, and people said, no, they're going to crash 50%. Juana, why haven't we had a 50% home price crash that the Crash Bros have been calling every year since 2019? Like, where is it? When's it coming?
Okay, so that's not economically possible when you've got more than half the market that is debt-free as far as their real estate. So when more than half the single-family market is debt-free, meaning that there is no mortgage on the property, then you don't have a sense of urgency. You don't have any reason to discount the home to get it sold. And even if you're selling the home for less than what your neighbor sold it for, so you might think, well, I'm giving a discount. Okay, you are, but you're not giving the home away. It might feel like it if you're getting $5,000 less than your neighbor, but you're truly not giving that home away. So you're not seeing these massive price declines, because once you see some substantial price declines, then those tend to snowball. They'll snowball downward the same way that they snowball upward, by the way. Because it just has to do with people's sentiment less than actual economic basis.
Last question. This is a question I get from a lot of people that watch the videos, because they know we mostly just do listings. Like, they always ask me, like, when should I sell? Like, is this a good time? Should I wait till the spring where there'll be more buyers? I don't want to sell when it's slow, because there's this perception that they'll get less money for the house, or they'll miss time, whatever. Of course, you're dealing with mostly super high-end houses, right? So why would somebody be like trying to sell their house today in October, their $5 million house in, October, November? Why not wait until like March?
Because they want to. And it really doesn't matter about the price point. Look, I mean, I say this all the time. People ask me, when's the best time to sell? When's the best time to buy? And my answer is always the same, regardless of the price point. The best time to buy or to sell is when it's the right time for you. There are so many other personal variables that are independent of what the market's doing, that those are far more important, and those lead to decision making far more than what the market's doing. You can't control the market. What you can control is other aspects of your life, and other aspects of your life will dictate when the right time for you to buy or to sell is.
Okay. So you're saying no housing crash?
That's not, I don't see how that's economically possible.
Right.
When we have so many homes that are debt free, there is no pressure to sell that would be sufficient to cause these people to take a substantial discount.
And foreclosures are at basically 30-year lows.
Well, there's nothing to foreclose on when more than half the homes don't have a mortgage.
Yeah, if you have a 2, 3, 4% interest rate, you're doing everything you can to make those payments and keep that low rate, because you don't want to go and give up your mortgage and then go have to pay, over $2,000 a month in a pay. And this is median numbers. If you're in California, you're probably like 2,000. Like, you can get a house and only have a $1,500. Yeah, you could. If you bought a house 4 years ago in Las Vegas, you'd have $1,500 a month payment, and it'd be like an actual house. You can't do that in like San Diego or Los Angeles or San Francisco or New York.
No, but for that kind of money, you can get a super nice house in other places. So,
Tulsa, Oklahoma, McAllen, Texas.
excuse me. Yes.
Yeah. All right. I'm gonna give you the final word.
Final word. Did you like the video? Was it interesting? Did you learn something? Did you laugh, cry? I don't know. Throw tomatoes at your device. I don't know what you did. But regardless of what you did, please remember to like the video, subscribe, hit the notification bell, share the video, leave us your real estate related comments as well as suggestions for future videos, and we'll see you guys on the next video. Bye.
Bye.